Because that's a big fear that a lot of people have right now is I don't want to be a burden on my kids. And then the kids are thinking, what happens if mom and dad need care? Do I have to take care of them? Do I move in? Do we put them, like, I'm going through this with so many families right now, Chris, and it's where my heart is like, that's why I was reaching out to try to find content on how to help these people because it's like, you know, they're going through it with their parents in this transition, and that's a crucial time to have the right tool to deploy the capital you need through those tax-free benefits from these types of annuities.
Hey, what's going on, Cash Flow Hackers? It's Chris with Life 180. I am here with my buddy, Danny Romberg. Danny is absolutely crushing it. He came over. We just started talking. Pension Protected Annuities.
Yes, this is going to be big, Chris.
So he just brought this up, and I was like, what the heck are you talking about? And so, full transparency, I don't even know what this is, but this is why I love surrounding myself with awesome people.
Thank you.
And so Danny and I were just talking, and he said things have never been busier for him in his entire career because of the fact, like, let's look around the world, all the uncertainty, all the things going on, and, you know, we both deal, I think, with our overall strategies. It's more about financial security than anything else, right?
Definitely.
And so
that's crucial for the right people.
You're right. Yeah. And right now, you know, because you deal with a lot of retirees.
Yeah.
A lot of like people more entering what we would call the distribution phase of life.
Approaching retirement and in retirement. Yeah, that's mainly who I'm helping to serve right now.
Which is really funny to me because you're really young.
I know.
Right?
I get that a lot. That happens all the time.
But no, that's awesome. So you like work in that market a lot, and that's not like my focus. I mean, we have obviously people in that age bracket that we work with, but that is certainly not my primary focus of the content that we usually create. So this is going to be fascinating. So talk to me about a pension protected annuity. What the heck does that even mean?
Yeah.
I'm going to drink my energy drink.
Please, go ahead. Thanks for having me on. So this is really important because I was recently at a conference with some of the top long-term care producers in the country.
Okay.
Staggering numbers for personal production. I mean, unbelievable.
Okay.
And so I had the fortunate experience of getting to go out with them after the conference, and they pulled me aside and they said, hey, look, kid. This is something you got to know because this is going to be massive over the next 5 years.
Okay.
What companies are doing now, and there's only a handful of them,
Okay.
they're engineering hybrid annuities.
Okay.
And these hybrid annuities have special long-term care benefits associated with them.
Okay.
And here's why that's going to be really important. There was a statistic that came out recently for annuity owners that said 73% of annuity owners are holding their annuity just in case they need long-term care.
Really?
So a lot of people buy an annuity with the intention of keeping their principal safe and getting a consistent retirement income.
Okay.
But what they find sometimes for a lot of people is maybe they don't need all that income as they originally thought they were going to.
Sure.
So they're holding this annuity and you go to talk to them and you say, well, what is this really for if you're not going to take the income from it? Well, just in case I need long-term care, it has a rider or an income stream that'll kick out a distribution for care. And that's what they're saving it for, 73% of them. And so that's a really important metric to pay attention to because along comes this hybrid annuity.
Okay.
And it has some really special things that are important to highlight on. Okay. Number one, for IRAs.
Okay.
So this is really incredible because sometimes you'll have one spouse that has a lot of their money concentrated in IRAs and the other spouse doesn't have that much.
Got it.
You can roll an IRA into one of these types of annuities. Yep. And the benefits for care will still come out tax-free.
Okay. Yeah, because it's a benefit. It's not a tax.
It's a benefit.
Or it's not the cash flow from it. Like
it's
so
a
it's
benefit.
not the income. So it's a benefit because it's an insurance product.
Yes.
And I think a lot of people need to be reminded of that. Like annuities are insurance-based products, so you can add in these riders and benefits that go with them.
Right. Exactly. And so the basis of the IRA will come out taxable just like a regular IRA.
Sure.
But the benefits will come out tax-free.
That's pretty sick.
Which is incredible. And again, I'm just going to throw this out there, like, I'm not a CPA, right? I'm not not tax advice, but
good disclaimer.
Thank you. I appreciate that. I figured you got it somewhere. But it's important to note that like this is really crucial for people because if they're saving their annuity for long-term care anyway, most of them, why not position it for that? Leverage it and get those benefits. And what's incredible about some of these are that some of the companies that make these annuities will allow you to cover your spouse with those tax-free benefits.
Really? So
let's say the IRA is on the husband, but you want to make sure that your wife is protected or your spouse is protected as well. You can do that with the benefits on their IRA.
Wait a minute. What do you mean you can protect your spouse on the benefit? So there's got to be underwriting on?
Underwriting is minimal.
Really?
Very compared to a life insurance underwriting.
Yeah, I mean,
minimal.
So I got to ask this then. So so you get an annuity that's pension protect. Like I don't know, still don't understand, quite frankly, the pension protected component of this. Maybe
I think it has to do with the law that was written that governs it.
Okay.
So that's where I think the name comes from.
So that's where the name comes from. Okay, cool. So that makes sense.
Yeah.
So you get an annuity with the long-term care stuff.
Yep.
Annuities are not really underwritten outside of finances typically, but then you throw long-term care on it.
Yeah. I'll tell you what the process is like. Some companies have an application. So you fill out a couple questions. Depending on how you fill those out, you're either approved or declined. Pretty basic. There's no tests.
Sure.
Some companies will do a phone call. So they'll follow up and just ask you the questions, maybe check prescriptions, the MIB, kind of a basic, what we call simplified underwriting.
Okay.
But there's no physicals. Okay. So it's just a pretty straightforward process. So if you have a fully taxable IRA and you roll it into one of these, it has a tax-free benefit for care, and then you can also apply that benefit to your spouse. And if you use the benefit portion of it, it'll come out tax-free, which is absolutely incredible. Now here's where it gets crazy. Okay. Let's say you have a non-qualified annuity.
Okay.
So you have an annuity that is after tax, but still, because it's a non-qualified annuity, it's tax deferred.
Sure.
Let's say you have an annuity that's built up a ton of gain.
Okay.
You can 1035 exchange it to the pension protected annuity, and the benefits will come out tax-free for care.
That's amazing.
Which is incredible.
So a lot of people that have annuities currently, they could 1035X those benefits,
or
that
annuity,
the annuity into the new annuity and take advantage of the benefits.
Exactly.
And so let's talk about that for a second, because I think the annuity market has gone through like a massive shift, and it's currently going through a massive shift. So anybody that bought an annuity, because most annuities have surrender periods with them, right? So that, like, say a 10-year surrender period-ish, maybe a little longer, maybe a little shorter, but let's just call it 10 years for the sake of argument in this conversation.
Yeah.
So you got a 10-year surrender period. Maybe you bought an annuity in 2013, 14, 15, 16, something of that nature. You built up cash value. Bottom line is probably that annuity is, I don't know, not the most, it's going to get destroyed by the current benefits, because the interest rate market and just the environment, the annuities themselves, the products have gotten better.
They've improved.
They've improved a lot.
Yeah, the insurance companies can buy new bonds now.
Yeah.
And they're passing that forward. Like you're seeing rates increase in everything that is coming out right now.
It's pretty amazing.
Yeah, so things get better.
And I love it, because the annuity market is kind of an indicator of like what's happening with the life insurance company's general fund. Yeah. And so I love it, because that also will trickle down to the whole life spot, which obviously we focus on a lot. Yeah. So I know it's coming, because it's happening already for the annuities, right?
It's happening for the annuities. Yeah.
It's pretty sick.
Yeah, it's coming around.
So, but that said, new products are coming out. You shared a story of a guy who was like, annuities are garbage. Like, I'm never going to do it. And then like literally 30 days later, he comes back and he's like, okay, we need to get moving on this.
People are reassessing their risk capacity. They're being forced to. And they're confronting what's happening right now. And they're saying, oh, you know what? Maybe this isn't the best thing for my immediate retirement. So people that are in that window of about 5 years before they're about to retire right now, and they're realizing that maybe they're exposed too much, are reevaluating. And so I think it's a crucial time to be having these conversations. But back to this type of annuity that I think is really going to be important. The reason why I'm so focused on it right now is a lot of people in their 60s, 70s, and even 80s think that planning for long-term care is outside the realm of possibility, because they're thinking about traditional long-term care insurance. Yeah. And this is a way that you can repurpose something that is maybe an older annuity that you had, or maybe an older life product that you had, maybe an old IUL, something that's out there that you could maybe repurpose to match your outcome that you want to have. And so the reason why I think it's crucial to discuss right now is if you have somebody that's in that category, and I just had somebody in their 80s recently where we were able to help set up one of these, and the benefits that come out tax-free were enough to cover what she was planning for in case she needed long-term care in their 80s.
That's crazy.
So these have massive utility.
She got underwritten for long-term care in her 80s?
Yes.
Through an annuity?
Because it's a hybrid annuity. It's not a traditional long-term care policy, but it has long-term care benefits. It's crazy. So it's really beneficial. And this is why the conversation is important, not only just for people in their 80s and 70s, but their kids. Yeah. Because that's a big fear that a lot of people have right now is, I don't want to be a burden on my kids. And then the kids are thinking, what happens if mom and dad need care? Do I have to take care of them? Do I move in? Do we put them? Like, I'm going through this with so many families right now, Chris, and it's where
massive,
my heart is. Like, that's why I was reaching out to try to find content on how to help these people, because it's like, you know, they're going through it with their parents in this transition, and that's a crucial time to have the right tool to deploy the capital you need through those tax-free benefits from these types of annuities.
That's amazing. So here's what I'll say. Anybody watching this, if you're interested in having a conversation about this, if you have a parent in that kind of space, or you know, you are in that space and you're trying to figure this out, you can email me directly, Chris@Life180, and I will connect you with Danny.
Thank you.
And you guys can just have a conversation, because he's a wizard with this stuff. And
I'm happy to serve, and I think it's important to get this information out here, because a lot of people are looking at traditional long-term care insurance, or people who give advice on long-term care insurance. They're going, oh, well, that's too expensive, I can't do it, so we're just going to roll the dice. And the math is suggesting that it's going to be a problem for like almost 70% of people.
It is a massive
problem. You know, the more we can raise awareness about the right types of tools, or even just shine light on these, that they're there, is crucial for people.
Well, and if the economy gets worse, which I think it's going to be, I saw a post by Jeff Bezos yesterday.
I read him.
Did you see that?
I saw the Wall Street Journal article that he did.
So he just literally did a Twitter post yesterday saying, it looks like it's time to batten down the hatches.
Yeah, that's what I read. Yeah.
Right?
Yeah.
Like, I just did a TikTok on it.
And if anybody knows.
So, like, when you get a guy, like, think about it this way. There is zero incentive for a guy like Jeff Bezos to start telling people to batten down the hatches and stop spending money. Right? Like, his wealth is created by you going to Amazon and spending money. Right?
Yeah,
so for him to say that is a very, very significant indicator. Like, to me, that's like one of the greatest indicators that there is. And so when we talk about like 73% of people, like, this is going to be an issue, like this is going to become more and more challenging if you don't get your money protected and insulated. Like, you win right now by avoiding losses. You win now by protecting your money. And you know, it's a different video, but like the whole idea of sequence of return risks and all these different things, like right now, if you are about to hit retirement, or just entered retirement, or you're concerned about kind of what's going on, what you do over the next 3 to 15, 16, 17 months is going to have a huge impact over the next 10 to 20 years. Like, I mean, it's, and I don't want to be dramatic, but mathematically, I could show you why that's the case.
Right, we just talked about that. It's going to be essential for people. And the problem is, a lot of people wait till it's too late. You know, I get a lot of calls from people who are like, hey, you know, I need, you know, something for care, and they're already in that situation. It's just like lending. You got to have it before you need it. You know, and so getting this done proactively is the key to make sure that you have the protection you need and you're cared for with dignity throughout the remainder of your life.
Totally. Well, thanks, man. That's amazing. So, guys, if you have any questions, I'm gonna also Danny has a YouTube channel himself. I'm gonna put the link for it down in the description below. If you want to watch any of his other content, go check him out. Follow him. He's amazing. And I'll also, if you want to just email me, I'll put a link in the description below. But just Chris@Life180.com, and I will connect you with him personally. And we'll, like, seriously, I'm happy to do so.
Thank you.
If you haven't already, subscribe, hit the bell that way you're notified every time we launch a new video. And we're going to film some more stuff right now.
Let's do it.
So, all right. Have a blessed, inspirational day. We'll see you on the next one.
Thank you.
Later.